The US dollar is mixed to kickstart your day. In this video, I'll take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, sterling versus US dollar from a tactical perspective. What I try to do is find similarities in some of the price action and tools that give you, a trader, an advantage to define the bias, define the risk, define the targets. That's what I try to do. So let's get started. Looking at the euro versus US dollar on the hourly chart, what levels are important from my technical perspective in this currency pair occurred up here at the 100-hour moving average over the last few days, where the price traded above and below it through here, and then used that level as resistance before moving to the downside. We moved back higher and moved back up to that 100-hour moving average, moved to the downside, moved back higher, moved to the downside, moved back higher, moved to the downside. Late yesterday, we fell below the 200-hour moving average, which should have kept the sellers in control. We did see increased momentum to the downside, but this target level over here at the broken 38.2% retracement of this move to the upside was not approached, and the market rotated back up toward that 200-hour moving average and tried to stay below that level. In the Asian session, we did move higher and get above that level, which would then target the 50% midpoint and also the 100-hour moving average again. But as you can see, we found willing sellers against 50% and moved back to the downside. Where do we go? Went right to the 38.2% retracement, which was our target yesterday to get to and through. Found willing buyers against that, and here we are back testing the 200-hour moving average. So, much ado about nothing. We have this swing area through here. We have the 38.2. We have the 100-hour moving average. We have the 50% retracement. All these levels are in the middle of this range, or near the middle of the range, more to the downside because we are below the 50% retracement. So we give the buy a little bit more credence in that direction. We're also still below the 200-hour moving average to come back up, testing that level. So if sellers are going to take control, this is the area you want to see them take control. If they can keep below this area, then the bias remains more to the downside. Look in the bottom of the swing area, 38.2% retracement, and then go low from there. As targets opens the door for further selling below that 38.2% retracement. Looking at the dollar versus yen, a break to the upside in trading yesterday. Saw the price extend above prior highs. Not once, twice, but three separate times. And trading here today, after a brief correction to the downside, we've spent the last 8 or so hours moving straight higher, higher, higher. We got above this 155.88 level. What level is that? Well, that was our target level over here on the daily chart. Going back in time, you see this high price right here. It's hard to see because it's on that weekly bar, first bar of the I guess it's first bar of the month, I guess. But in any case, it's the high price came in at 155.88, so that was the target. This level right here now becomes the next key target, defined by a swing high right here, which moved to the downside. Swing highs right here that led to the downside. That level comes in at 156.73. As you can see, we're in between the 155.88 level now and the 156.73 level, currently trading 156.22. So there's some buyers in control, targets ahead, but not a lot of support until going back to the 155.88 level for the dollar versus yen. So a lot of room in there with the current price trading at around the 23 level. So the buyers on the break are getting rewarded. We'll see if they can continue that reward with increased momentum to the upside. But definitely we're seeing bullish trend moves in the dollar versus yen. So be aware of that. Let's finally take a look at the sterling versus US dollar. And from a technical perspective, what sticks out to me using my tools is you see this 100 and 200-hour moving average here. They're near converged. Why? Because the market is doing this type of price action. I didn't mean to do that. I meant to do this. This type of price action with ups and downs. We had a fake move to the upside that failed, and then another little one here, then reestablished resistance near the 38.2% retracement. That's of this move to the downside from this high. Didn't mean to do that either. From this high to this low, that 38.2 comes in 1.31855. So with the market trading higher, lower, we have these moving averages converging near the middle of that trading range. And Yesterday, the high price in the afternoon came up to that 100-hour moving average, filling willing sellers. Today, in the European session, we came up to that 100, 200-hour moving average, filling willing sellers, and have since pushed that down. Where do we go? Well, we went to the bottom of this box right here, which has its roots going back to even these levels right through here, where the lows and highs formed in this area, near this area. We had early buyers here that pushed the price to the high, and we returned back to this area for the first time since this point right here in trading here today. That level comes in between 1.3083 and 1.3095. And we saw the corresponding bounce off that level as buyers leaned against the bottom of this red box. Not willing to get out of it just yet. We'll see how that plays out going forward. But what we do know now is that there's probably resistance. Well, there is resistance. We know at the 100 and 200-hour moving average, that's for sure. And I have this horizontal line cutting across here, which corresponds with some different lows and highs. In particular, go back to this low right here, and then randomly we find some sellers here that push the price to the downside. We came back up to that level, pushed the price to the downside, moved above that level, and used both the 200-hour moving average and that level as a support to push higher through here. It got a little messy with the moving averages also in play through here and here, but using this area sort of as a rough level, 131.40. Then we look at the 131.50 to 55 level where the moving averages are. Those are topside resistance levels, and we got to stay below these levels to keep the bias leaning in the downward direction. Overall, however, with the price not able to get above the 38.2% retracement for long of this move to the downside, the sellers still hold more of the advantage. So there you have it. A look at 3 of the major currency pairs. Kickstart your trading day. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.